How you can make 50 pips per day in Forex trading. This strategy, however, only works with a limited number of currency pairs. The major currency pairs, such as pound sterling against US dollar and euro against US dollar, are ideal for this strategy. What is the Forex strategy of 50 pips per day? The 50 pips a day Forex strategy was developed as a day trading strategy for 1-hour time frames, with the goal of profiting from approximately half of a currency pair's intraday volatility. Be careful when applying this method, since even though it is frequently quite profitable and very simple to apply, it does not guarantee that you will always make a profit of 50 pip every day. You should use caution when determining the stop loss. This strategy has no indicators. This means you don't have to spend a lot of time each day scouring the charts for various indicators and graph patterns. You can only open one trade per day for a single currency pair. If you are a Forex trader who enjoys opening multiple trades per day for the same currency pair, this strategy may not be for you. This strategy eliminates the need to constantly monitor your trades to determine the best time to open or close them. It only takes a few clicks in the morning. The rules are as follows. Open the daily chart and look for currency pairs that have an average daily range of 100 pips or more. Drop down to the 1-hour time frame and align your time zone with GMT. In the 1-hour chart, look for candlestick of 7 a.m. GMT. This time zone is ideal for capitalizing on daily movement with this strategy. At the close of the 7 a.m. hourly candlestick, immediately open 2 pending orders. 2. You should place 2 opposing pending orders when the 7 a.m. GMT 1-hour candlestick expires. The first is a buy stop order 2 pips above the high, and the second is a sell stop order 2 pips below the low. For a buy order, place a stop loss approximately 5 to 10 pips below the low of the 7 a.m. GMT candlestick. And for a sell order, place a stop loss approximately 5 to 10 pips above the high of the 7 a.m. GMT candlestick. Price will move towards one of the orders, activating it. When one of the orders is executed, the other must be cancelled. Place a 50 pip take profit order. When the price reaches the stop loss or take profit order, the trade will be closed. However, in some cases, the price may not reach any of these orders by the end of the day, forcing you to decide whether to close it or leave it for longer. Pound sterling to US dollar currency pair has up to 126 pips average range per day, with a high volatility. So the currency pair is good for this strategy. Is the 50 pips per day strategy suitable for you? The 50 pips a day Forex strategy is an excellent choice for traders who want to make a good profit with minimal effort. Simply open 2 opposing pending orders, select a stop loss and take profit. So, if that sounds interesting to you, you should give it a shot. You must practice it on demo first, before applying it on a live trade. Thank you for watching, and don't fail to like and subscribe, as we will be releasing more strategies soon.